In this video, I am going to share with you some exciting developments in the Singapore property market and industrial sectors that could significantly impact your investment decisions. We'll dive into the current state of the market, analyze some recent big moves by key players, and explore what these trends mean for you as an investor. Let's get into it. Hey friends, welcome back to the channel. I'm Iggy here, and as you know, I've been covering topics such as stocks, finance, CPF, and basically everything related to growing your wealth. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've also covered over 500 videos and over 250,000 watch hours as of October 2024. Today, we're going to take a deep dive into the Singapore property market and some interesting developments in the industrial sector. Let's start with an overview of the Singapore property market in 2024. The public housing scene is seeing a rosy picture so far this year. In the latest quarter, the HDB resale index increased by 2.3%, which is the largest increase in the last 5 quarters. Not only did prices increase, but the volume did too. In the first 6 months of 2024, the number of resale transactions hit 14,420, the highest half-year sales since the first half of 2021. What's particularly interesting is the surge in million-dollar HDB flats. A total of 419 such transactions were made in the first 6 months of 2024, with 95 of them happening in June alone. To put this in perspective, there were 470 HDB resale flats transacted at $1 million and above in the entire year of 2023. It's pretty certain that we'll see this record broken by the end of Q3 2024. In fact, the record for the highest price transacted for an HDB flat keeps getting broken. In July 2024, a premium 5-room HDB flat at Margaret Drive was transacted at $1,725,888 Singapore dollars. This has left many wondering if we'll see an HDB flat transacting at 2 million Singapore dollars very soon. However, it's important to note that while these million-dollar transactions are grabbing headlines, they still represent a small portion of the overall market. In the first 6 months of 2024, million-dollar transactions accounted for about 3% of total resale volume, up from 1.82% in 2023. In June, this percentage reached 4.4% of total resale volume. Now, let's shift our focus to the private property market. The scene here is less rosy. In the first half of 2024, overall private home prices only expanded by 2.5%, lower than the 3.1% gain in the first half of 2023. Transaction volume also fell by 3.8%, with just 9,145 units transacted. This is the lowest number for a 6-month period since the first half of 2020, which was at the height of the COVID-19 pandemic. The slowdown in the private property market is largely due to an alarmingly low number of developer sales, with just 1,843 units transacted in the first half of 2024. This number is even lower than what we saw during the second half of 2008 during the global financial crisis. Several factors are contributing to this situation. Developers are remaining cautious amid the high interest rate environment. The rapid rise of private home prices in the past few years is now stalling as buyers are also becoming increasingly cautious amid the risk of economic uncertainty. It's likely going to take a while before the market gets accustomed to the high prices in the private home scene. It wasn't too long ago when 2,000 Singapore dollars per square foot was only reserved for premium housing at city fringes or city center. Now, almost all new private homes launched by developers are transacting at 2,000 Singapore dollar PSF or higher. This disparity between the public and private housing markets is leading more potential private home buyers to look at resale HDB flats to ensure affordability. As a result, the 15-month wait period rule started in 2022 is likely to remain in place for a long period of time. Now, let's look at some specific moves in the market that caught my attention. Savannah REITs recently announced plans to sell their property at 1 Tuas Avenue 4 for 21.88 million Singapore dollars. This sale price is 9.4% higher than the property's book value as of June 30, 2024. The property in question is an industrial building with a gross floor area of about 120,653 square feet. This move by Savannah REITs shows they're actively managing their portfolio and looking to unlock value for their unit holders. Moving on to the industrial sector, Dyna-Mac Holdings has been making waves with some significant contract wins. As of April 2024, they announced a record order book of 896 million Singapore dollars, with projects to be delivered until 2026. The main contract involves the construction of process modules and marks the largest ever contract win in Dyna-Mac's history, involving a record tonnage and number of process modules in a single contract. These contracts include the provision of services for the execution, fabrication, installation, and integration work on vessels, as well as scope increases for current projects. Dyna-Mac's recent capacity expansion and upgrading allows for further optimization of construction methodology and production workflow, which is expected to increase productivity by using less manpower and time for the same amount of work. It's worth noting that as of October 3, 2024, Dyna-Mac's share price closed at 39 cents, showing a 4% increase. This positive movement in the stock price reflects investor confidence in the company's growth prospects following these significant contract wins. Now, let's talk about REITs, which are always a hot topic for income-focused investors. The REIT sector is seeing improved sentiment as the U.S. Federal Reserve initiated its first interest rate cut since 2020 of 0.5 percentage points. With interest rates poised to fall more in the coming months, REITs should enjoy more respite from the high interest costs that have been crimping their distributable income. One REIT that's worth keeping an eye on is Mapletree Logistics Trust, MLT. As of June 30, 2024, MLT had assets under management worth 13.4 billion Singapore dollars spread across 188 properties in 8 countries. However, MLT reported a weak set of earnings for the first quarter of fiscal 2025 ending June 30, 2024. Revenue dipped 0.3% year-on-year to 181.7 million Singapore dollars, while net property income fell by 0.9% year-on-year to 156.7 million Singapore dollars. The REIT's performance was adversely impacted by weaker China contributions, absence of revenue from divested properties, and currency weakness for both the renminbi and Japanese yen. As a result, distribution per unit tumbled by 8.9% year-on-year to 0.02068 Singapore dollars, exacerbated by a 9.4% year-on-year jump in finance costs. Despite these challenges, MLT's portfolio occupancy remained high at 95.7%, and the REITs registered a positive rental reversion of 2.6% for the quarter. In September 2024, MLT announced the divestment of 3 properties in Malaysia for a total of Rm 157.5 million, about 47.7 million Singapore dollars. These divestments are in line with the manager's strategy to rejuvenate the portfolio through selective divestments to free up capital for investment in high-specification, modern logistics properties. Another REIT to watch is CapitaLand Integrated Commercial Trust, CICT. CICT reported a respectable set of earnings for the first half of 2024, with revenue increasing 2.2% year-on-year to 792 million Singapore dollars. Net property income increased by 5.4% year-on-year to 582.4 million Singapore dollars, while distribution per unit improved by 2.5% year-on-year to 0.0543 Singapore dollars. CICT also reported resilient operating metrics with committed portfolio occupancy hovering at 96.8%. Both its retail and office segments enjoyed positive rental reversions of 9.3% and 15%, respectively. In early September 2024, CICT announced the acquisition of a 50% interest in ION Orchard Mall for a total acquisition outlay of 1.1 billion Singapore dollars. This property has a gross yield of around 7.1% and will consolidate 6 retail presence in the downtown precinct. So, what does all this mean for you as an investor? First, it's clear that the property market in Singapore is showing divergent trends between public and private housing. The surge in HDB resale prices and million-dollar flats suggests there's still strong demand for public housing, particularly for larger, well-located units. This could present opportunities for those looking to upgrade or invest in HDB properties. On the private property front, the slowdown in price growth and transaction volume suggests a more cautious market. This could be a good time for potential buyers to negotiate better deals, especially in the resale market. However, it's important to be aware of the high interest rate environment and ensure you can comfortably service your mortgage. For those interested in REITs, the potential for interest rate cuts in the coming months could provide a boost to the sector. However, it's crucial to look at individual REITs and their specific market exposures. MLT's challenges with its China properties and currency headwinds highlight the importance of geographic diversification in REITs portfolios. The industrial sector, as exemplified by Dyna-Mac's record order book, shows that there are still pockets of growth in the Singapore economy. Investors might want to look at companies that are benefiting from ongoing demand in sectors like offshore and marine. Remember, investing is not just about following the latest news or trends. It's about understanding how these developments fit into the broader economic context and your personal financial goals. Don't rush into investments just because they're making headlines. Take the time to research, understand the risks, and consider how they fit into your overall investment strategy. As always, if you're unsure about any investment decisions, it's a good idea to consult with a financial advisor who can provide personalized advice based on your specific situation. If you found this video informative and helpful, please give it a thumbs up and consider subscribing to the Investing Iguana channel. Your support helps me continue to bring you valuable insights on the Singapore property market and other investment opportunities. And if you want to dive deeper into the world of REITs, check out my video on how to build a diversified REITs portfolio. You'll find the link in the description below. Thanks for watching, and I'll see you in the next video.